Friday on MyStockScanner Live. That means it's the finish line of another week in the markets. Let's review the winners, spot the movers, and run the big names through our 3-point playbook. And our portfolio is at, let me look, 31% sharp, and that's for the year so far. It's all about quality, upside, and timing. And speaking of those words, Liam Flavel and Hans Henrik Nielsen are the gents behind that playbook. I'm Jesper Behrens. I get to ask the questions. Liam, what stood out to you this week? What was the big thing that you noticed this week?
The big thing I noticed, probably the Intel results, actually. Being a tech nerd, then I'm always interested in the Intel turnaround. Intel have been around for years. Yeah, they're doing a good job at the moment, it looks like.
And we're going to talk about Intel in just a little bit. Hans Henrik, I'm looking at you. You look calm and relaxed, a little bit of tick on one eye. Is your blood pressure down from the earnings call on Tesla?
Yeah, well, I think I've taken a couple of pills, so I'm about there.
That means that we can talk sense with you and not nonsense all the time.
Absolutely.
That sounds
never.
good. A promise is there for sure. It is Friday. We have the stock face-off. That will be Pepsi that goes up against Coke. We'll fly with Saab. We'll mix with FLS, FL Smith, as we had a question from one of our users on our platforms. And you can send us questions if you use our email, fomo@mystockscanner.com. But also inflation will be in the mix. Inflation from the US, numbers getting out today. Trump agrees to meet with Xi, but also sends Canada into the woods, almost literally. We will get to that in a minute. I have a number of the day, 244.1%. I'm not going to ask you guys what it is, but I will tell what it is about at the end of the show. And let's dig into it. Volvo car, Hensidan, went up by 40%. And tada, Intel jumped 3.4% almost. And after hours, it's up by 8.4%. They beat expectation, and they say it's AR that drives the chip demand. Liam, are we to believe them? Are those numbers solid, or what's up with Intel?
I think they are. Intel have obviously been in the news recently because Nvidia took a stake in them. They've got some tailwinds behind them, which are really positive. They've got a fabrication plant that's up and running now with their new chips being made out of it, which seems to be going pretty well, even though they're not quite hitting the production levels that they wanted. So they're going to be slightly slower for the Panther Lake series of chips next year. But the big benefit they're getting is that Windows 10 was officially declared deceased this month, and that means that everyone's got to upgrade to go to Windows 11 because you need new processors in your computer for it.
What about mine, Windows 7? Where do I go? I'm joking. Sorry.
I don't like making jokes about your age, so I'm not going to say anything to that whatsoever. But yeah, so Intel's going to get. They think they're going to get quite a tailwind from that, which is going to be a benefit. But their main driver is going to be looking at AI chips going forward. If we look at them in the playbook very, very quickly and look at my screen, we'll go on to Volvo in just a second. Our 3-point playbook, very quickly as we go through, we want to see quality stocks, and the first part of our playbook screen actually tells us very quickly whether this is quality stock or not. It really depends. You want to look for red. If there's a lot of red on the screen, then it means that actually the quality may not be there. From our point of view, we've got a quality score here of 27 out of 100, which is low, and the earnings are not particularly impressive. You've also got some reds on the return on capital and the return on equity there. All things that we don't particularly like. So Intel isn't a stock that we'd actually be in, and there's not even that much more potential.
But Trump's like it.
Yeah, Trump, but he's invested.
Like it.
Trump is invested in it, so he has to like it. So, but anyway, check your microphone. I think it might have switched over again. I just want to make absolutely sure. But Liam, if we stick with sort of things, we just said Volvo up by 40%. Again, is there any more gas in the tank after a jump like that?
Who knows? We're not in the guessing game of these sort of things. What we look at is try and follow our rules, and our rules say, as you can see here from our playbook page, the quality is actually pretty good of Volvo. It's 70 out of 100 there, so that gives us a good feeling initially. But then you look at everything else, and it's red all over. So the thing that Volvo came out with, they said that their orders are starting to pick up. And they're doing pretty well. So you can see that these are starting to be priced in, maybe with the 40% increase, but still one that we'd stick away from. And the analysts don't particularly like it either. They've been dropping about 10% in their earnings estimates in the last 7 days and last 30 days.
But good for those people who had bought Volvo stock yesterday. They really got a bump, and not a bumper to bumper thing. Luckily, but a bump in the share price. It is no secret, Hans Henrik and Liam, that we also, even though that we dabble in stocks, not dabble, but we look at stocks almost 12 hours a day, that we can also get a FOMO moment. And then we can also say 4-lettered words that are not very nice. And we did that yesterday because we had a stock of the day called, do we agree that it's called khaki, or what do you call it?
I think khaki.
Yeah. Okay.
Even though you don't spell it with a K. No,
No.
khaki was a great stock. We saw it a couple of days ago. You can see from our quality score here that we got 92. Earnings are going up, revenues are going up. The PEG ratio, which actually tells us how much of that price is actually priced in, how much of the growth is priced in, is below 2, which is where we want it. So 1.09 there. They've also got some good returns on equity. Return on capital is a little bit in the red. So everything is firing on all cylinders for the company. If I just switch over to our valuation. So the first point of the 3-point playbook is a big tick there. If we come into the system and see the valuation, we can see that when Hans Henrik actually published his article, the stock was down here, and we could see some quite good upside up to our 3 cases here, and a very low downside. So it would have been a good pick a couple of days ago.
Didn't we buy it?
Because because of earnings. We don't come in when something's only 2 days away from earnings. We don't touch it, because it could just as easily have come up and said, actually, we missed a bit. We're not quite going to get the orders in this quarter, so we're going to drop, and then the stock would have dropped 10%. So we just stay away from that volatility. Sometimes that works for us. Sometimes, as in this one, we miss the boat, and there are plenty of others out there that we'll get next time.
Yeah, there's a saying in Danish that's about cable cars. There's always a new cable car coming. That's if you're my age, then you remember what that means. But guys, if we take away from khaki that we looked at now, and then sort of zoom out and do the macroeconomics, Hans Henrik, I've noticed you've been quiet. It takes a bit to manage that, as a matter of fact.
Yeah, I was checking my microphone. Is the sound okay?
I think that we can hear you, but I'm going to ask you about, because the thing is, because of the government shutdown, we're not going to get any numbers, and yet we had numbers, or expecting numbers today, the CPI preview, which is the inflation.
We are so excited. We have been longing for numbers, nerdy stuff. We need to. It's not just us. It's everyone investing in building new factories, new companies in the US. They want numbers. They want to see how can we navigate in the market. They're not getting anything because the market is shut down. So today we get the CPI, which is the inflation. How much is prices going up? They need to get that out today because they're adjusting some social, some government
benefits,
money to some welfare services there. So that is good. We get that inflation number. That is extremely important because it tells us how much is prices going up, and why is that important for us as investors? Well, that is because next week the Federal Reserve, the central bank in the US, they're going to decide what interest rates should be in the future. And if inflation is very high, they might not lower the interest rate. If it's very low, they might lower the interest rate. That means a lot for stocks, and will definitely affect the market today in 2 hours and 20 minutes right now.
Do you have any expectations for it, Hans Henrik?
Well, I think it will be around where expectations are in the 3.1%, which is in the high end. We have been expecting that the tariff war would slowly creep into to inflation numbers. They might begin to do that now. We have said end of Q3, Q4, and definitely Q1 next year. We'll start to see the tariff coming in here, but no one knows how quickly it goes.
If we stay on the macro side of things,
Yeah.
there was definitely a movement, and I know that you shouldn't use the word war sort of lightly in that sense, but there was one war that sort of was toned down a little bit because Trump is
Yeah, I don't really
going to
get it.
meet with
Yeah.
Xi Thursday next week, as if we didn't have enough on the agenda for that week. They will meet in South Korea.
For
But at
now,
the,
they will. It has
yeah,
been a bit on and off.
it is a very on and off relationship they have, should we say it like that. They're basically not sharing the kids at the moment. That's what we can say. But at the same time, Trump just managed to find a new enemy,
Yeah.
and a closer
If
one.
if we just take a very quick the Xi-Trump meeting, if we assume that it goes on Thursday, I think next week, that is a good thing for the market. We want the tariff war to be calmed down, and the fact that those two are actually able to meet in the same room, that is good. That make the market go green yesterday. But as you say, first of all, Trump, he ended all trade talks with Canada, their biggest trade partner, their neighbor there. And that was simply because Canada had the audacity of showing a commercial, TV commercial, with a quote from Reagan saying tariffs are bad, tariffs destroy countries and economies. So end of that, fake news, fraud, all that. However, Carney, which is the guy you see here on the left, he's the leader in Canada. He actually went out saying that in a public speech. So this is not something, sometimes we see them positioning them a bit in the trade war and come out with some announcement. But Carney made a speech to the Canadian people saying, US is not really our friend anymore. And we will, first of all, try and double our export to everyone else but US, and all our government purchases. And we are talking somewhere between 50 and $100 billion a year here that we normally do with the US. They will be stopped. They will be phased out. We're talking military, IT, steel, aluminium, everything that they buy from US, they will try to get elsewhere. That
Let me
is
ask.
a huge step.
Let me ask the two of you. I know that Canada is not the trading partner that makes tacos. That's more the one to the south of the US. But is there realistically a chance that Trump will have another taco, this one being a Canadian one?
The problem here is that this is not Trump saying this. This is Carney.
I
And if
know,
this was
but
just public statement and a bit of, let's say, Carney had his own lie social or whatever it's called, and he said, "I am mad at Trump," then they could tackle out. But this was a public speech to the Canadian people saying, "We've had it." And I don't see any tackling out from and Carney is not a tackle guy. He's
He's not.
normally a guy that means business.
He's a politician. He's got Teflon hands that he can change
Yeah.
direction like the
My
wind.
my point
That's
here
what
is
politicians
that if he were in any doubt, if he thought maybe we'll have to take this back, he would not have gone out this way. He would have made a little statement, a little social post, a little commentary in an interview. This was, as you can see here, very potent, on the scene, workers behind him talking to the public saying, now we've had it. Of
yeah.
course, there can be some nuances here, but I think this, I see this as an extremely severe statement.
Oh, it
And
is. I mean,
yeah.
and three of them haven't even got hard hats on. I mean, that's quite.
Oh, that is
That's quite
so
a
severe.
statement.
That is,
Guys,
yeah.
guys, let's calm down here. I was going to make an acronym that says that maybe Carney will have cake, and that could be Carney always quick exit.
Or
It's not working. We'll
kill,
we'll get something better.
Yeah.
We'll get
Kills
something better.
Americans.
We
Kills.
will get something better than that. But listen, guys, if we look to our neighbor, apart from Volvo Car had a tremendous a bump yesterday, Liam, Saab, a thing that we have been talking a lot about this week because we put out a poll, which Swedish stock should we watch? our viewers said they would like to hear more about Saab, and today they got
Yep.
out with numbers. What can we read from those numbers?
The numbers are basically, it's all about the potential in the future. That's what it comes down to. They actually missed their third quarter sales numbers, which normally the market would punish them on, but today they quite like them. What are they up 7% now? I don't know. You got the live figures, haven't you, there, Jesper? But
yeah, 6.8. Yeah,
yeah.
Sure.
So the market loves the numbers, and it's about. They're looking at potentially growing their sales by 300 to 400% by 2030. I've read one commentator say, and massively increasing their profits on there. So, I mean, we've had it. We went over it on the playbook on Wednesday. I seem to remember. So everything is green on question one on the playbook. So it's undoubtedly a high quality stock. When we come down to valuations. It was high anyway in the first place, so we're up at the green level, the top level, where our very best case. But you can see that we're going to start ignoring this number here, which is where we were looking at before, which was a 25% increase, and we're going to start looking at the end of next year as our target for this. So there's potential for 50%. So there is more gas in the tank there. There is also sort of potential drop here, that we've put in. We did well on Saab this year. Would we buy it now? No, it's too expensive. It's even more expensive now. And technically, it's just about in the buy zone, just above that green 50-day moving average that we use so often for our decision making.
Just quickly, we mentioned it before. Many of these defense stocks are industrial companies like Rheinmetall, Saab, and so on. So they need capacity to manufacture. It's not like a software company that can copy paste their software some more times. So yes, there will be growth, but most of it is priced in.
And if we stick with the theme of industrials, we had a question on our Facebook page, the members only Facebook page, from Kim Wissing. A little bit that could be tied into the Saab thing here, but because it's a question about fear of missing out is one thing, but also when to exit on a stock that you had profit on. It's a question that we get very often. Hans Henrik.
Indeed.
You get the concrete mixer here.
That is and that is concrete. Yes, FLS, the Danish company here, and normally when we do the 3-point playbook, as you know, we start out looking at, is it a quality company? We have talked about FLS several times lately, and it is a good quality industrial company, no doubt there. Looking at the value chart, where we look at the earnings per share, we multiply that by price earning, and gives us an idea of, is there good potential? And even though it is a bit in the what we call the expensive zone in this PE band here, we talk a lot about this on the channel. We have a course about it, all that. So don't be afraid out there if you don't get all we talk about here. But what we look at here is there is a potential of maybe 50-55% upwards. There's not that much risk. The question was, what about timing? Because this member was a bit afraid of the big rise in price and said, should I get out now? Should I take my profit? What we do, and that's not necessarily right for everyone, first of all, we look at our two MTI, momentum trend indicators here. And when they are both green, there is a reasonable good chance of the stock having momentum upwards. Then we keep in stocks that are going up normally. We normally have what is called the 50-day moving average, the green line here. That is one we look for to get out if that is crossed. But with a stock that just goes completely straight up like this one, we have a couple of other things like the 20-day moving average. We have a couple of other indicators that we teach in our course. So what I said yesterday, and that is not an advice in any way because people should make their own decisions. But personally, if I had FLS in my portfolio, which I don't, but if I had, I would give it some more room to run on. And I actually think it's up today. Can you see it, Jesper?
I don't have it on my screen, but the thing is,
I'll look
again, I just also want to underline, this is not financial advice. This is not recommendations of any stocks in that sense. We're just telling what we are doing.
On the contrary, we actually want people not to listen to our advice. We want, no, but it's
I know. Take the
Yeah. What we want to tell people is learn to do the analysis yourself. People can look at how we do them. They can take some inspiration, but they should not just be listening to some talking heads on YouTube or whatever where they listen to us. They should learn to do the analysis themselves.
Well, we have an analysis because it's Friday, and you guys know that on Fridays we always serve up the face-off. There we go.
Ooh.
Face-off is Pepsi versus Coke. You get one each. Who's Pepsi? Who's Coke? Of the two of you, it'll be your nickname in the future.
Yeah. Should I start out, Liam?
Go for it.
I can go for it. I have chosen Pepsi. That is when I drink some of these American brands. That is Pepsi I'm looking at. Pepsi, we all know it. I don't need to explain what they do. We know them for the Coke, but also a bunch of other drinks they have. They are actually a decent quality company. They have a quality score of 91, as we see. They have earnings per share going up. We do like to see that. They have revenue that is on. It has stalled, and on in the estimates, it's also stalling a bit. The one called the PEG ratio, that is price earning divided by growth, where we're looking at is, are we paying too much for future growth? We like that to be below 2 or 2.5 to make sure we're not paying too much of a price for it. 1.87 is absolutely decent here. It's not bad. When we look at analysts, they're fairly satisfied. However, the return on capital is going a bit in the wrong direction. Overall, it's actually a very decent stock. We can see that what's called the interest coverage, meaning how many times over can they pay the interest with the money they make. We like that to be 4, 5-ish and above. This is 9, so it's great. They are not prone to be hit by big hikes in interest rates. If I go on and look at the potential here, we're using our value chart where we are looking at what analyst expects their earnings to be, and then we are putting in some price earning numbers. And I can tell right away, I did the analysis in an article today, and the price earning numbers I have put in here is a bit below what we put in for Coke, but we can get back to that in a second. But that gives us a bear case of -7% roughly, a base case of +7%, and a bull case of 21. We do like this one to be 2, 3, 4 times as much in positive as this is negative. So this is actually not a good case. We found it was good quality, but with the pricing were not insanely good. However,
and
yeah,
as you said, we're going to put out an article where we're going to go even deeper into the layers
yeah,
of this,
definitely.
but we are careful on time here. So basically,
Definitely.
we're going to shift over to Coke right now.
If I may say, just quickly, timing graph looks good. Liam, if you take over
told off by Jesper.
Yeah, you got told off by the headmaster.
Coke, well, I've got about 5 seconds now, haven't I?
Yeah.
Coke is a very, very similar story. High quality score, good earnings, and probably better growth, actually. The analysts is one of the major difference here, where they have gone up slightly in the last week or so. You can see that. But the interest coverage is the same story, and the cash flow generation. What we see on the value chart, so whether there's upside or not in the stock, it's just bouncing off of our base case. So it means we put our base case in quite a good position. So we think that these numbers here for the analysts, maybe about break even for us now to the end of the year, and then a little bit higher, maybe 6% up in the next year or so is where we might be. But we might lose 2% in our bear case. So it's not a bad one, but it's not massively enticing. And then from a timing perspective, actually the stock shot up above its 50-day SMA. We could have potentially bought it maybe around here, but you can see the weekly MTI was red. So I think we'd have waited and just been a bit more hesitant. So yeah, it's a good quality stock, maybe not enough upside for us.
Well, you guys are always full of wisdom and full of words. That's why we also put articles out on our social media, and also, of course, on our platform, where we'll do even more analysis of the face-off between these two stocks. If you tune in on Monday, you'll get to hear about our portfolio in the 3-point playbook portfolio, which is up by 31% starting this morning. It'll be interesting to see where it stands on Monday. The market is a little bit red, 0.63% in Denmark. But you guys, I know that you were talking, what was it, 17, 21%? I got you beat, and I got you beat so bad because I picked a number of the day which was 244.1%. That is the year-to-date performance of Caledonia Mining Corporation. The biggest jump in gold mining overall. Number 2 is Idaho Strategic Resources, 239.25. And Highcroft Mining Holding comes in there at number 3, barely a smidgen, a gold dust less, 237.1%. When we look into next week, you guys, it's this is major. We got Fed, we got Xi and Trump talking, but we also have earnings from basically, Liam, all the big ones. It's a tech tornado. We got Google, Meta, Amazon, Microsoft, and Apple. Which one are you going to look for? Who's going to come out the winner next week, Liam?
I think Microsoft or Google. They're the ones I'm particularly interested in seeing. Microsoft got a huge opportunity. Google's just a monster.
There we go. That's a quick one. Let's see if Hans Henrik can do the same when we talk about the weekend wrap. I know you're going to show a little graph here at the end, and there's a reason for it. This is when Hans Henrik tease. This is a Hans Henrik tease. Tell us what we see.
On Sunday in my weekend wrap up, I will talk about option markets where something really, really disturbing is happening. And then there is a bit of a financial nuclear bomb called the basis trade that I'll also talk on. So people will be quite depressed when I'm finished.
Oh, thank you so much. That is not a teaser. That's a scare. You're a bit ahead of Halloween there. So, well, tune in on Sunday when Hans Henrik gives us the weekend wrap. We're at the end of the show for today. And remember, if you have questions for us, it's FOMO@MyStockScanner.com. That is your Friday market scan complete. Invest smart, rest easy, and let the 3-point playbook guide you into the weekend. Guys, I'll see you on Monday at noon. Until then, have a great weekend and happy investing all.